Joining us now is Tom Tucci. He is the head of the U.S. Treasury trading at RBC Capital Markets. Tom, wow, what a turnout for the 10-year.
Right, great results.
What do you think drove the action and demand?
There's a lot of different things. The demand that we've been seeing over the last couple of days has been cross-market related, and what I mean by that is against the UK and against the German fixed-rate market. The U.S. market had cheapened up significantly since the non-farm payroll number. What we've seen is international investors coming into the market and pension fund managers here in the U.S. coming in and taking advantage of that yield spread. So not surprised by the actual strong bidding. I'm surprised that it came so far through the market, but there was good demand leading up into that last hour before the auction.
How long do you suppose this market will stay, as you put it, cheap?
Well, I think the situation is the market's trying to get used to the fact that the Fed is not around with their mortgage-backed buying program. So they're trying to find out where the real natural level of interest rate should be without the Fed being involved. So we're going to go through a price discovery range. Right now, the market obviously extended a little bit too far. We saw some buying at 4% on the 10-year note. And what you're seeing now is people on a relative value basis coming back into the market to buy the bond market because of the spread against other fixed rates. I think we're in a range that's a little bit higher than the previous range. So if you ask me what that range would be, I'd guess it would be 4% to 3.75 in the 10-year, and then we'll start to take a look what the economic news is going forward. The market was trying to price in some kind of tightening by the Fed. Yesterday's minutes showed you that they're nowhere near that type of tightening, and the front end already buoyed itself yesterday. Today is just the follow-through in the longer end of the market.
And Tom, how does this all set us up for tomorrow's 30-year auction?
I think very well. The 30-year itself was the one that we thought was the most attractive on that cross-market basis that I referred to earlier. We think that there'll be a tremendous amount of international demand. Obviously, the more the market rallies in front of tomorrow, it takes away a lot of that concession that's in the marketplace. But in general, the demand, you know that there's a floor under the market now, and you have confidence bidding against that.
Tom, big picture, when will Treasury supply overtake demand?
I think when you actually see sustained economic growth without fiscal stimulus, and I think we're several quarters away from finding that out. Right now, we're still in a deflationary mode. There's a tremendous amount of capacity slack in the economy, and I think as long as that takes place, there's still a deflationary force that continues to keep rates lower.
All right, Tom Tucci, RBC Capital Markets, helping us get a little context on the results of a real strongly participated 10-year auction today.